I'm going to discuss gold in this video. I'm not a gold bug, but I do own gold and silver. Gold is hitting an all-time high this week, and I'm referring to the nominal price, not the inflation-adjusted price. The current spot price for 1 ounce of gold is $2,296 as of 1:30 Central Standard Time today when I last checked. GLD is one of the gold bullion ETFs that investors can buy on the stock exchange. It has hit a new 52-week high earlier today, and I believe that was an all-time high as well. I have bought and sold several precious metal bullion ETFs, which I've discussed in my blog, but do not have a current position in any of them. The recent price spike in gold will cause me to sell some gold bullion, not very much, which I store in my safe deposit boxes at my bank. I mostly ignore those holdings, viewing gold as a possible store of value when and if the US dollar collapses in value and becomes so much confetti. I last sold gold and silver in September 2011 and January 2012, as discussed in the blog. Gold went over $1,900 an ounce in September 2011, as I recall, which was a new nominal price high and sufficient for me to do something in response. Like Bitcoin, there is no way, in my opinion, to determine the fair value of gold. Many have tried and argued for certain methods to determine fair value. I generally discussed and dismissed those attempts in a blog dated April 23, 2013. I do not view those methods as providing much guidance as to what the intrinsic value of gold is from time to time. I do not believe that the recent price rise is related to the possibility of a Fed rate cut later this year, as some are claiming now. My opinion is unchanged from that 2013 blog post when I noted that it was impossible to calculate the fair value of gold. It is basically a supply-demand issue, with demand being based on emotions and consequently is not predictable as to the price. There can be temporary increases in demand that may result from anxiety about current events like the possible spread of the Israel-Hamas war or the war in Ukraine to include other nations. Central bank transactions may have a temporary up or down impact on the price. I view gold to be primarily a store of value, an alternative to fiat currencies like the US dollar and the euro, whose supply are in long-term parabolic rises. The Macro Trends website has a 100-year gold price chart that can be adjusted for inflation by checking a box. Using monthly averages, the peak inflation adjusted price was in February 1980 near 2,600, about 664 nominal terms. The nominal high price was in January 1980, I think, at $850. The price was fixed at $35 for a very long time until about 1970 or 71. I mentioned in a YouTube video, which I will link in the More section, a mutual fund that maintains a somewhat consistent 25% allocation in gold and silver bullion. I'm referring to the Permanent Portfolio Fund, symbol PRPFX, which can be bought with no transaction fees at several brokers. That fund is my second largest mutual fund position, way behind the largest allocation, which is in the T. Rowe Price Capital Appreciation Fund, which has the symbol PRWCX. which is currently closed to new investors. I have discussed the permanent portfolio, PRPFX, in several blog posts. Morningstar currently has a 4-star rating on it. I view that fund as more designed for a financial Armageddon type event due to its weightings in gold, silver, bullion, U.S. Treasury, Swiss franc government bonds, short-term investment grade corporate bonds. The stock weighting, as of the last report, was close to 35%, with about 37% of the stock allocation in real estate investment trust and natural resource stocks. It's not the kind of fund that will likely generate a satisfactory total return during a long-term stock bull market. The year-to-date return through yesterday was only 6.6%,